And firstly, I wanted to know how you are feeling. Are you feeling nervous, confident, or maybe ready to apply all these learnings into your real life? How you are feeling today? Good. Okay. Looking forward for real life situations. Umlan, feeling great, confident. Anyone nervous about the assessment? No. Excited to apply these new insights? No. Cert says yes, looking forward. It was excellent learning so far, Bhavan. Assessment would be part of that learning. Yes, Anil. Correct. Arnav, I have one question. The PPT are still not uploaded in the course material. Arnav, upgrad people will be there when we'll start the assessment. All the questions related. Okay, let me first tell you how this session we have structured today. So we'll be having around 1.5 hour session. So half an hour will be the revision, what all we have covered in last 6 sessions, and then we'll be having the guidance on the assessment, and upgrad people will be there. Whatever the questions you have related to the assessment, I know today you guys are waiting for the assessment only. So whatever the questions you have, online, offline, discussion, case studies, everything related to the assessment, we'll discuss it after just half an hour. So just give me half an hour. We'll discuss whatever we have covered in last 6 sessions. Just a quick recap. So, okay. Uh, but before we start, the key takeaways for the first session, I just wanted to know from you all what do you remember about the first session? Anything you remember about the first session? What we have covered? Any topic which you remember? Anil, no, there is no assessment will be happening today. Today we'll just have the recap and the guidance on the assessment. So learners, and anyone remembers what will be what we have covered in first session. If anyone remembers, 3 months back we have done this session one. So what we covered in session one. Okay, we are getting the answers now. How is the board structured? Yes. Anyone else? Evolution of role of the board. Okay, correct. The different decision makers, structure of the board, departments, etc., and overview. Duties and responsibilities. Yes. Okay. So, okay, Kirat, we can go to the next slide. Let's cover let's have the recap. So in this slide, we have captured what we have discussed in the first session, which was around how modern boards are designed and how they operate. So we started with the board composition, where effectiveness comes from having the right balance of executive directors, independent directors, and diversity of thought, ensuring both informed decision making and objective oversight. Then we spoke about the clear role separation, which is fundamental to governance discipline, which is management who runs the business, while the board provides oversight and strategic directions. When this boundary is maintained, governance remains effective. When it blurs, it creates risk. We also discussed about compliance as an embedded discipline rather than the checklist. Elements like proper disclosures, structured board and committee meetings, and maintenance of statutory records, which ensures transparency, accountability, and alignment with the regulatory framework. Further, strong management accountability ensures that while the board sets the expectation and direction, the execution responsibility lies with the management and key managerial personnel who are accountable for performance, risk, and compliance. Further, these fundamentals are now supported by the digital capabilities as mentioned on the right side of the slide, like modern boardrooms increasingly relying on secure digital board portals for controlled access and seamless collaboration. Decision making is becoming more data driven with real time dashboards providing visibility into performance, risk, and key metrics, thereby enhancing both speed and quality of decisions. Then we have paperless meetings and digital approvals. They have improved efficiency and responsiveness. And importantly, cybersecurity has emerged as a critical board level priority, requiring oversight to protect sensitive information and ensure organizational resilience. So to summarize, while the core principles of governance remains unchanged, but modern boardrooms are distinguished by how effectively they leverage digital tools and adopt to a more complex, fast-moving environment. Okay, next, someone said duties, responsibilities. Yes, we have covered that in first session. So moving on to the actually the important aspect of the board governance, that is understanding what directors are expected to do, what powers they hold, and what are the risks they may face. So starting with core director response duties, they are non-negotiable and form the foundation of the director's role. So first one is fiduciary duty. Directors must act in a good faith and in the best interest of the company and its stakeholders. So this means decisions should not be driven by a personal benefit, but by analyzing what is right for the company. Second one is due care and diligence, where directors are expected to be informed, ask the right questions, apply their independent judgment. Simply relying on management without analyzing is not sufficient. Thirdly, was it was conflict of interest disclosure. This is the critical one. Directors must proactively disclose any direct or indirect interest and should not get involved in that transaction. And finally, confidentiality. Given the level of sensitive information boards deal with, maintaining confidentiality is both an ethical and legal expectation. Then moving on to the key board powers, while duties define the responsibilities, power enable the action. Board plays a crucial role in strategic oversight. They do not manage day-to-day operations, but they shape the long-term direction and ensure financial decisions are sound. They also exercise financial and operational powers, such as approving financial statements, issuing securities, borrowing funds, or granting loans. So these decisions which directly impact the company's stability. And importantly, boards have a leadership and oversight authority also, which means that they set the tone at the top, guide the organization's direction, and ensure that management is functioning effectively and within well-defined boundaries. Then coming to the liabilities, there is a civil liability where directors can be held responsible for losses arising from negligence or breach of duty. Then we have criminal liability in case of involving fraud or misstatements or regulatory violations, which can lead to fines or even imprisonment. And then in certain situations, there is a personal liabilities where directors may be personally held accountable. So finally, quick note on the disqualification. Directors can be disqualified from holding office due to reasons like insolvency, criminal convictions, associations with non-compliant companies, non-attendance in board meetings, or failure to disclose conflicts, which can lead to vacating the position. So session one gave us the structural and accountability foundation, who governs, how boards are structured, and what responsibilities directors carry. Okay. So learners, anyone remembers what we have covered in the corporate governance session? Maybe the principles or anything else if you remember. Learners? No one remembers what we have covered in corporate governance? Different governance models worldwide, yes. In corporate governance, like how companies build trust, run things, covers the principles, global versus Indian, best practices, touches upon compliances, focusing on practices around the world, transparency, responsibility, accountability, fairness. Correct. These are the main principles. Conflict of interest. We looked at what companies were accountable to. Yes, correct. You have covered all the key takeaways, but still, let me just cover it once again. So, in session two, we moved from board structure and directors' accountability into the broader concept of corporate governance. At its core, corporate governance is about ensuring that companies are running responsibly, transparently, and ethically under effective board oversight, with the ultimate objective of protecting the stakeholder interest and enabling sustainable value creation. But what we emphasize in that session is that governance is not just the regulatory requirement, it is a strategic enabler. Strong governance builds trust, improves decision making, and ultimately strengthens long term performance. So, to simplify this concept, we structured corporate governance around four key pillars: accountability, transparency, responsibility, and fairness, which you just said. So, starting with the accountability, this pillar answers a fundamental question: who is responsible and for what? So, here we covered delegation of authority framework, which clearly defines decision making levels and avoid lapse, overlaps, or gaps. Then we covered board committees such as audit, nomination, remuneration, risk committees, which enable specialized and focused oversight. Then we also covered board evaluation mechanism, which ensures that even the board's own effectiveness is periodically assessed. So this accountability is not assumed, it is structured, documented, and continuously monitored. Without this, governance becomes ambiguous and ineffective. Then moving to the transparency, this pillar focuses on the quality, consistency, and accessibility of the information. Here we covered the elements like well-defined policies and SOPs. Then we covered use of technology, including digital tools and governance platforms. Then we have robust disclosures and communication frameworks, both internal and external. Then on we have this ongoing board training and familiarization programs, ensuring directors are equipped to interpret information effectively. So transparency reduces the information asymmetry, especially between the management and the board. Then we covered the responsibility. This is where the governance expands beyond internal structures to the broader impact. Here we discussed about the ESG by environmental social governance considerations. Then we covered corporate social responsibility obligations, and then we have active stakeholder engagement. We had one session on the stakeholder engagement also. So this reflects a shift in governance thinking from a shareholder-centric approach to a stakeholder-inclusive model. So today, boards are expected to consider not just the financial outcomes, but also social and environmental implications of those decisions. And finally, we covered the fairness. So this pillar ensures equitable treatment of all these for all the stakeholders, particularly minority shareholders and vulnerable groups. So we explored mechanisms like whistleblower frameworks, which provide safe channels for raising concerns, then board diversity, which brings varied perspectives and reduces biasness. Then we covered grievance redressal systems, which ensure stakeholder issues are addressed fairly and timely. So fairness is critical because governance failures often arise not from the lack of the rules, but from the biasness or unequal applications of those rules. So we like one of the most important shift we discuss, which is governance beyond compliance. corporate governance is often misunderstood as compliance driven, but in reality, compliance is just the baseline. True governance goes beyond that in compliance. So this includes identifying and managing conflict of interest, applying directors' ethical judgment, especially in gray areas where regulations may not provide clear answers. Then we have sustainable value creation, which is the ultimate objective of the governance. So this is where governance becomes forward-looking and strategic rather than reactive. So in session two, we established the philosophical and structural foundation of the governance. What governance means, the principles that guide it, how governance goes beyond compliance, and how different global models shape board priorities and stakeholder expectations. Okay, anyone remembers what was there in board oversight? Though heading tells finance, risk, and regulatory. But beyond that, SOX, COSO, Arnab is fully ready. Covers finance stuff, risk management. Okay. Then ends with the breakdown. Yes. Anyone else? If anyone else remember what we covered? Overview of these key areas. Okay. Related party transactions. Anything else? Cybersecurity. Okay, we can move to the next slide and let's have a recap of session three. Okay, so in session three, we move from governance principle into the practical question: how does a board actually exercise oversight in a structured and a disciplined way? We discussed that board oversight is not the ad hoc questioning in the meetings. It is a systematic framework that ensures financial integrity, risk resilience, and regulatory discipline. And all these, operate together under one umbrella, which is called board accountability. So we discussed board oversight through these three integrated pillars. One, the financial oversight. This pillar focuses on protecting financial integrity and shareholders' value. Here, the board's role is to ensure that company's financial position is accurate, transparent, and fairly represented. So this includes reviewing of financial statements and disclosures, closely scrutinizing related party transactions, monitoring loans to directors and intercorporate loans and investments, then exercising oversight through audit committee. But beyond reviewing numbers, the board's real focus should be ensuring integrity of financial reporting, maintaining independence of audit and internal controls, preventing misuse of funds or conflicts of interest. So ultimately, financial oversight is not just about the compliance, it is about ensuring long-term financial sustainability and trust. Then we have risk oversight, the second pillar. So boards today are expected not just to react to the risk, but to anticipate it, assess it, and manage them proactively. So this covers internal audit functions, internal financial controls, broader enterprise risk management framework. But the board's focus should be early detection and timely escalation of risk, assessing control effectiveness, ensuring business resilience and continuity, and embedding risk-informed decision-making into the strategy. So risk oversight is essentially about asking what can go wrong, how prepared we are, and are we making decisions with full awareness of the risk involved. Then we have the regulatory oversight, the third pillar, which ensures that the organization operates within the boundaries of applicable laws and governance frameworks. This includes COSO for internal controls, SOX for financial reporting integrity, and ISO 31000 for risk management. So here the board's role is not to manage the compliance on a daily basis, but to ensure that there is accuracy, transparency, and fairness in the reporting. Audit and control mechanisms remain independent and effective. There is no misuse of funds or governance gaps, and the organization remains sustainable from a regulatory and financial standpoint. So, regulatory oversight ensures discipline and credibility in how the organizations operates externally. So, based on these oversight, directors or management are required to sign the director's responsibility statement. In most jurisdiction, it is done annually. So, this statement confirms that directors have exercised due care and diligence in preparing the financial statements, applied consistent accounting policies, maintained adequate internal controls, and ensured compliance with the applicable laws and governance standards. So, session 3 gave us the clarity that board oversight operates through structured financial discipline, strong risk governance, and regulatory compliance, supported by the formal accountability through the director's responsibility statement. Okay. Next, what we have covered in the digital governance and M&A readiness. Covers like digital AI risk decisions to remediate. Also explains who's responsible, key risk like data breaches, okay. Real life examples, okay. Anyone else? AI related risk, okay. Anyone else? So, Pierre, for control effectiveness, you can go through the COSO, ISO, and ERM, uh, plus SOX. You can go through those recordings. You'll get to know about the control effectiveness. Okay. Next, let's go to the session fourth. Okay. So we have examined how boards govern two of the most powerful value drivers, which is digital transformation and growth through mergers and acquisitions. So the message is clear. Technology and transactions can create massive value, but without strong governance, they can equally destroy trust, capital, and goodwill. So we started with the digital governance foundations, how boards structure digital oversight. We discussed core pillars like policy, compliance, data governance, cybersecurity, technology oversight, and ethical practices. The importance of this framework is to build trust and transparency, lower digital risk, enable faster and more informed decisions, ensure regulatory compliance, and improving operational efficiency. We also acknowledge real life challenges companies generally face, such as organizational resistance to change, rapid technology evolution, regulatory complexity, and increasing data and cyber exposure. So, strategically, boards must establish clear governance committees or councils, invest in automation and digital tools, and embed ethics and continuous training. We also then deep dived into the cybersecurity as a board level responsibility. We reviewed evolving threats like ransomware, data breaches, cloud vulnerability, and third party risk. Then we discussed about the practical challenges like limited cyber capability, complex threat landscapes, regulatory pressures, weak preparedness, cultural gaps, strategic and enterprise risk integration issues. So strategically, boards must take into account cyber risk into enterprise strategy and culture, establish mature cyber risk management programs, then continuously monitor resilience and ensure clear ownership of the cyber oversight. The third area which we discussed was the AI, where governance becomes both an opportunity and a risk. So one side we have the opportunities, which is efficiency and automation, better decision making, innovation and growth, enhanced customer and stakeholder experience. And on the right side, we have the on the other side we have the data privacy concerns, which are which is the risk, lack of transparency, over dependence on AI systems, regulatory uncertainty. So the board's role becomes critical here to ensure strategic oversight for AI adoption, ethical and responsible use of AI, strong risk and compliance frameworks, investment in talent and capacity building, and investment in crisis preparedness also. So, in simple terms, the board must ensure that innovation is responsible, controlled, and aligned with the long term strategy. We also discussed about the M&A readiness, which is another area where board oversight becomes highly strategic. So M&A is not just the transaction; it is a governance test of whether the board can evaluate, approve, and monitor complex decisions effectively or not. So we started by understanding the different types of M&A, mergers and amalgamations, demergers, slum sales, JVs, strategic partnerships, share or asset sale. So each structure has different implications, financial, regulatory, and strategic, which the board must understand before making any decision. Then we looked at why companies pursue M&A. Their typical objectives are market expansion and scale, capability or technology acquisition, optimization and synergies, portfolio diversification, and value creation. So the key point here is M&A should always be strategic led and not just the opportunity driven. Then we have factors, critical evaluation factors. This is where actually the board's analytical role comes in before approving any transactions. Board must evaluate financial viability, valuation rational, funding structure, and impact on shareholders' value, regulatory approvals, litigations, tax exposures, ESG, labor and compliance consideration, and equally important is internal readiness, which is board effectiveness, independence and conflict management, strength of internal controls and governance frameworks. So M&A is not just the external due diligence, it is also about the internal governance readiness. And then finally, we have the board's role in M&A, which is the most important in this life cycle. So the board must validate the strategic logic for the transaction and maintain strict capital discipline, approve deal structure, and actively oversee the associated risk, ensure robust governance protections and effective control frameworks, critically supervise post-merger integrations, which is where the majority of deals ultimately succeed or fail. So because value creation does not happen at just the signing, it happens after the execution. So section 4 reinforced that boards must govern technology, risk, cyber resilience, AI ethics, and transaction discipline through structured oversight, accountability, and strategic judgment. Okay. So learners, what we have covered in the independent director session. It's about the independent directors and why they matter. Okay. Responsibility of independent directors. Yes. Covers wise rules, eligibility, how they foresee stuff like related party transactions, challenges they face, risk and liability, and some real life. So, key requirements, regulatory framework. Okay. Yes, Kirat, we can go to the next slide. Okay, so in session 5, we focused on a role that often defines the credibility of a board, the independent director. An independent director is not merely an external name to the board, they represent independent thinking, ethical balance, and long term stewardship. When independent directors function effectively, boardroom decisions become more balanced, transparent, and resilient. So we explored the real value of the independent directors and why IDs are critical for the board. They help ensure that decisions are not dominated by a single group or interest. They strengthen confidence among investors and stakeholders by improving openness and governance credibility. They bring objectivity into management oversight and provide a counterbalance to promoter influence. And ultimately, they support sustainable growth rather than short term wins. So, independent directors serve as the moral compass and ethical guardian of the board. Further, we also discuss the importance of the readiness before stepping into independent director position. So this includes confirming eligibility and independence, ensuring relevant experience, expertise, and sufficient time commitment, identifying and declaring any potential conflicts, understanding compensation structures, and ensuring that adequate protection through insurance and indemnity arrangements. We further discuss about the behaviors that distinguish impactful independent directors. They demonstrate moral courage, sound judgment, commercial awareness, comfort with digital and risk topics, and the ability to question constructively without creating friction. Their strength lies in influencing outcomes through insight rather than any authority. We discussed about the role of the independent directors, like offering objective perspective on strategy, maintaining high ethical standards, strengthening oversight of risk and financial discipline. Sorry, protecting minority interests, supporting balanced stakeholder decisions, and improving board effectiveness through thoughtful evaluation. So, their value lies in consistently applying independent thinking. We also acknowledge the practical challenges independent directors face, like limited access to the information, subtle influence dynamics, increasing regulatory exposures, rapidly evolving digital and ESG expectations, time demands, and reputational accountability. So, recognizing these realities help directors prepare proactively rather than reacting defensively. So, session five helped us to think not only about the governance theory, but also about our own preparedness and ethical obligations. So, independent directorships demand courage, diligent preparation, and ongoing development, skill development. Okay, the last one. This was the recent one, so I hope everyone remembers what we have covered in stakeholder engagement and investor relations. How companies work with stakeholders in different jurisdictions. Okay. Anything else? Do you guys remember? Global standards. Okay. Basically about stakeholders, how companies deal with them, covers who stakeholders are, how to identify and engage with them, why it matters. Okay, looked at the investor relations. So overall, it's like a guide on managing relationships. Yes. Shareholder versus stakeholder change now. Yes. Internal and external. Trust and reputation, better decision making, risk management, long-term sustainability. Yes. Correct. I guess everyone is ready for the assessment. Okay. So in session six, we began by clarifying who stakeholders actually are, how they differ across organizations, and why not all stakeholders carry the same level of influence or impact. We discussed different categories of stakeholders, such as internal and external, and also explored emerging stakeholders category like digital communities, ESG focus investors, regulators across jurisdictions, and some others. So this helped us move from a narrow shareholder mindset and appreciate how modern organizations operate within a much broader ecosystem of expectations and accountability. Further, we then analyzed how engagement is not a one time interaction but a structured leadership discipline The objective is to systematically capture stakeholder perspective and translate into the business priorities, risk signals, and strategic inputs. High performing organizations treat stakeholders insights as decision intelligence rather than some compliance activity or reputation management. So this approach strengthens the trust, improves decision quality, and supports the long-term value creation. We walk through how engagement progresses through a logical sequence, which is first the identifying the relevant stakeholders, prioritizing them based on influence and impact, clarifying the expectations, selecting engagement methods, maintaining ongoing dialogue, embedding insights into decision making, and aligning outcomes with the organizational strategy. So the emphasis on consistency, traceability, and governance ownership. We also discussed about the investor relations as a strategic management responsibility rather than some communication function. So strong investor engagement ensures that organization communicates performance, strategy, risk, sustainability commitment in a clear, reliable, and timely manner. So this includes structured interactions with analysts, shareholders, regulators, capital markets, supported by transparent disclosures and integrated reporting practices. We also discussed about the key investor relations communication activities like timely financial results announcement, earning calls, as well as investor presentations, roadshows that articulate the company's strategy and equity story. They are complemented by the comprehensive annual reports, integrated reports, ESG disclosures, that how the business creates a long-term value, alongside regulatory filings, stock exchange announcements, press releases that ensure compliance and transparency. And finally, regular investor meetings, we clear stakeholder communications, and an up-to-date investor relation website, which helps building trust, provide equal access to information, and maintain an open dialogue with the market. So, from the board perspective, oversight focuses on ensuring that stakeholder perspectives are incorporated early into the strategic decisions. Trade-offs between competing interests are evaluated thoughtfully, and that engagement outcomes are periodically reviewed. And on the investor side, board monitors disclosure quality, consistency of narrative, regulatory discipline, credibility in the market, and organizations' ability to build long-term investor trust. And finally, across each session, we also covered the concepts in real world best practices and regulatory precedents. So, this helped translate theoretical principles into the practical boardroom application, highlighting how regulators interpret fiduciary responsibilities, oversight failures, disclosure lapses, and accountability expectations in the real life scenarios. So we have in last six sessions we have covered all these topics. Can we go to the assessment part now, Kirat? Okay, so learners, before we start the guidance, just wanted to confirm if on your portal, on your LMS portal, assessment is visible to you now. Okay, it is visible, and is it enabled also? I've already completed. Oh, lovely. Great. Okay, so it is enabled. So still I'll already complete it. Very nice. So I'll still give you a brief about the assessment. So we have like 100 marks assessment where you need to score 40 or more in that assessment. So there will be objective type questions and three case studies. There are around 10 objective type questions and three case studies. Case study includes five MCQ, five, each case study includes actually five MCQs and five descriptive questions. So I would recommend that please go through all the presentations, all the recordings, and then get into this assessment part. So it's an open book also. You can refer to the credible external sources also for the assessment part. So yes, this was the guidance. So if you have any questions related to the assessment, you can ask. I guess upgrad, uh, someone from upgrad is also there. Swaroop, you there?
Baba, I guess Baruch is not there. Somebody else from their team is there.
Is there? Okay.
Yeah.
So who's there from upgrad?
Yeah, hi, Prerna here.
Okay, hi Prerna. So Prerna, there are some questions. Would you like to address them? So first one is,
Yes.
do you need to complete the assessment in one sitting?
Yes, there is a timer on the website. So there are instructions given also. So once you open that page, if you're the test itself open a new browser. So if you're opening it, you have to, once the test start, you have to complete it in one sitting itself. You cannot re-attempt it.
Okay. So learners, just one thing, please go through the recordings and presentation and then get into the assessment. Is there a deadline for the completion?
I also saw one of the question in the very start of the session. They were asking for the PPTs, right? So the PPTs are already uploaded on the platform. You can go on your live session resources where your sessions are there. You can click on view resources and then you can find the PPTs there. If you're still unable to find it, please write it to us on student support. We'll help you out.
Prerna, could you just provide your email, the student support email ID on the chat box?
Yes, I'll do that.
Thank you. So is there a deadline for completion? I guess 2 weeks. 2 weeks is there? What exactly the date is there, Prerna?
Yes, hold on a minute. I'll just confirm.
Then we have what is the time frame to complete the assessment? I guess Prerna will tell this. Do we have to complete it by today? No, no, not required. You can take your time. How long is the timer to complete it? How
Bhavna
much
and
time
Prerna,
for
I
the
think it
assessment?
looks like these are quite generic questions. So is there a kind of the FAQs or something so that we can go through that and we should be able to get a good understanding before we attempt this test?
Yes, Prerna, I guess guidance note FAQ is there, right?
Because what I could see right now on the website is that there is a PWC graded assessment. And if there's a timer there, then there's an introduction as well. So can we go through an introduction before we attempt it, whether the introduction is part of the timer? Because I think those clarity we certainly need.
So I did attempt it, the thing, but I think the sitting in at doing it in one go is only for the MCQ, because once you start the MCQ, it kind of goes into a full screen mode, and then you have to do, and there are like not too many MCQs. And then there is a subjective part where based on the case study, you have to do MCQ part, which is timer driven. But then there is a question answer, which you have to do offline and then upload it as a PDF. So it's not like the entire thing has to be done in one sitting, because I couldn't do it in one sitting. But the MCQ, when you start it, you have to do it in one sitting.
So Archana, these MCQs are also part of the case studies as well. So every case study also has an MCQ part.
Yeah,
of it?
they have like five MCQs, like just 5, not like
for every case study.
not like 30, 40.
So Anil, no. Anil, there are 10 questions, the objective type question. Again, they are the MCQs only, which are the general one, like from all these 6 sessions, there are 10 questions. And then we have 3 case studies. Each case study has 5 MCQs, which is related to that particular case study. And then we have 5 descriptive questions.
Okay, and for the first 10 MCQs, as I think Archana mentioned, there is a timer, but for the case studies, there is no timer. It can
For
be
the
done
when you start the MCQ, Anil, there is a timer, but until you start the MCQ of the case study, you have time to read the case study. And whenever you start the MCQ, then you get into a timer mode. Before that, you can take as much time as you want to read the case study.
Okay, got it. Thank
So
you.
it's not very high pressure.
Yeah. So the deadline is 15th May. And yes, because I might have triggered the timer. Now the case study shows 1 hour, 10 minutes left. Okay, that's what Ronald says.
Okay, maybe then 1 hour is a very long time. And the case studies they're good case studies. They're not that complex, but
Yeah.
very good, very relevant.
And the introduction part of it, which is there, is a part of the timer, or we can go through that introduction before we start the test, Arjuna?
No, you don't have, I didn't actually look at the timer much because there was enough time. Introduction is, I think, some videos, I believe, that we have to go through, which,
Upgrad people, sorry,
yeah,
Prerna, could you please confirm this?
that you can do anytime. You have to just
Yeah,
finish those
timer.
before you get it.
Timer is only for the MCQs. The case
Yeah.
studies and everything, you can, do it at your own pace. There is no timer for that. And before, moving ahead with your case study submissions or even your quizzes, we would recommend you to go through all the recordings before.
No, the introduction videos, those are the ones that we had to complete before the assessment got unlocked, right?
If anyone can share their screen, that would be, easy to understand.
Mine, I think they're all marked as done, so I may not be able to share it.
Okay, if someone else can share, Anil, maybe.
Bhavya, if I may add my input since I've completed this.
Yes,
Yes,
please.
I agree with Archana because the assessment got unlocked after I finished when going through the intros, which is basically a little bit of what is being done, how it's done at upgrade, and so on and so forth. Now, for the MCQs, yes, the timers are only for the MCQs, the general initial MCQ set, and also for each case study, when you're answering the MCQs, there is it goes into a separate proctored screen kind of mode. You finish the MCQs at one go, close it. Then when you're going through the case study, when you're reading it, I don't think there is much there. There may be a 1 hour thing. I didn't look at it because I didn't need 1 hour. But again, for the case study, subjective questions is I think as Bhavya said, maybe 1 hour. But the MCQ for for the case studies, that is again proctored and it opens into a separate window. Right? So yeah, but I just wanted to add the exam is, as somebody said, it's nice, not too simple, not too complex. Yeah, we shouldn't lose any sleep over this. That's my only point.
I have one question to you. These subjective questions, right, where you have to write, let's say, case studies or something like that, right? So is it how it is getting evaluated? Is it like somebody evaluating, or is it like evaluated by a computer or something?
I think it is manual because I haven't received my mark grading yet.
Okay, so somebody's going to do that. Okay.
I guess so.
Yes.
Maybe Prerna can confirm that.
Yes, there is an evaluator. The quizzes get automatically evaluated on the platform. Okay, for the case studies, it gets evaluated.
Yes. That now, how many MCQs you've got correct, that you already know. They will tell you immediately. 4 on 5, 3 on 5, 2 on 5, 5 on 5. That they are letting you know immediately. It's the subjective questions that I think Prerna will be manually evaluated. Then equally,
Yes,
my
correct.
question is, how long would it kind of before we hear back from the team?
Okay, so just reviewing the timelines for everyone. Okay, so 15th May, we're keeping a deadline for y'all to complete the case studies. Okay, we'll take around more 10 to 15 days for the grading and stretching people who are requesting, because parallelly you're doing your DBAs, there might be deadlines, right? So we'll aiming to close by 30th May. So by first week of April, your scores will get published. Assessment scores are automatically published once you get completed. The case study scores will be published by first week of May.
You mean June, May or June?
First,
Because we are
first Yeah, first week of June.
Sorry, June. Okay. And post that, we'll be sending you the communications for the certificates. Once the scores are published, within 14 working days, your certificates will be received.
So that means sometime around the second half of June, if
Yes,
if my
correct.
understanding is correct. Okay, understood. But basically, our work is done once we complete this thing, right? The assessment.
Yes.
Okay. So, yeah, okay.
And the MCQs and case studies, which are subjective questions, can be taken separately. Is it correct?
Yes.
MCQs for the case study, right?
So we can finish the first MCQ, which I think 10 MCQs that we can complete. We can complete the MCQs for the case studies in one go, but the subjective answers can be posted separately.
Yes.
Okay.
So, learners, any other question?
And how the
One
certificate appears? I mean, it comes along with the result out of 100 marks, how much you have secured, and then the certificate. What's the
No,
format of?
it's a certificate which gives you a description that you have completed your program from PWC. It doesn't define your marks over there.
Oh, I see. Okay.
Okay, so how do we know our grades then?
Your scorecard will show your grades, like
And,
your total.
Yeah, and that will be uploaded on the portal.
Yes.
Okay, so that will be around the end of May, as far as I understand,
Yes.
right? Okay.
So,
Can I share screen? Just want to clarify.
yes.
Okay, let me share screen.
Business
Let me
system.
see whether I got it right. Okay. All right. So this is where I was trying out like about half a day ago. Okay, I just want to clarify. Have I triggered this MCQ? Or I have not triggered, I have not started? Or is this the end? Because I have not answered any question, but have I triggered and ended this MCQ? Because over here it says 0, and because I was just experimenting, I was just checking out.
You
And
haven't
over here it
entered
says
it
1.
because
I'm not so sure.
yeah, because that is locked. If you see, if you have completed your objective questions, your case study, your third segment would have been unlocked for you.
Ah, okay. So in other words, I have not triggered yet, right?
Yes.
Okay.
Yes.
All right. Okay. So in that case, thank you so much. Thank you.
Thank you.
So, learners, any other question? Okay, then maybe we can wrap up the session. And I would like to, give you best wishes from
Excuse
PWC
me,
side.
may I have a quick question, please?
Yes, yes.
We have 3 cases, 100 marks. How does that work out if it's all evenly weighted?
No, we have case studies plus objective type questions. Objective type questions, the first 10 questions are for 10 marks. Then each case study is for 30 marks. So which makes it 90 plus 10.
Thank you.
Okay. So all the very best learners for the assessment and for your future endeavors. I hope you enjoyed this program, and it was actually very much insightful. So thank you very much.
Yes. Thank you.
Thank you.
Thanks a lot.
Thank you.
Thank you.
Yeah. Thank you. Very
Thank
insightful.
Thank you,
Yes, thank you.
everybody. Good luck.
Thank
Thank
you.
you.
Thank you.
Thank you very much.
Thank you. Bye-bye.
Thank you very
Thank
much.
you.